Nobody is going to teach you this. Not the courses, not the YouTube gurus, not the trading books sitting on your shelf. What I'm about to share with you today is something I discovered after years of losing money, rebuilding my account, losing it again, and finally figuring out what was actually going wrong. And here's the thing that's going to surprise you. It has nothing to do with a strategy. It has nothing to do with a setup or a pattern or an indicator. It has everything to do with something happening between your ears. Stay with me, because this might be the most important trading video you watch all year. Here's what we're covering today. 3 specific tricks. 3 things that almost nobody in the trading world talks about openly. Things that will immediately change how you show up at your trading desk every single day. These aren't complicated. They don't require a new platform or a new strategy. They just require you to be honest with yourself. And by the end of this video, you'll have 3 tools you can apply starting tomorrow morning. Let's go. Let me start by telling you about a trader named Ryan. Ryan is 30 years old. He lives in Columbus, Ohio. He's been trading forex for about 2 years. On paper, Ryan has everything figured out. He's watched hundreds of hours of content. He has a written strategy. He knows about risk management. He knows about the 1% rule. He knows about stop losses and take profits. He's done the work. And yet every single month, Ryan ends the month slightly down or barely break even. Not because of one big loss, but because of dozens of small, stupid decisions that add up. And when I say stupid, I don't mean Ryan is stupid. Ryan is actually very intelligent. I mean decisions that he himself would describe as stupid. Decisions he made while fully knowing they were wrong. Have you ever placed a trade and thought to yourself, I know I shouldn't be doing this, and then did it anyway? That's Ryan. Every single week. He'd see a setup that didn't quite meet his criteria, and instead of passing on it, he'd find a reason to take it. He'd tell himself the context was close enough. He'd tell himself this one was different. He'd tell himself he'd just use a slightly smaller position size so it didn't really count as breaking his rules. And then he'd lose. And then he'd feel terrible about it. Not just because of the money, but because he knew. He knew before he clicked. And he clicked anyway. This is what I call the knowing-doing gap, and it is the single most underrated problem in retail trading. Most trading education assumes that if you know the right thing to do, you'll do it. But that's not how human beings work. Knowing and doing are 2 completely separate skills. You can know that you shouldn't eat junk food at midnight and still open the fridge. You can know you should exercise and still sit on the couch. You can know your trade setup doesn't meet your criteria and still enter the trade. Knowledge without a bridge to behavior is useless, and most traders spend all their time building knowledge and 0 time building that bridge. So why does this happen? Why do intelligent, educated traders like Ryan keep doing things they know are wrong? It comes down to something called cognitive dissonance. Your brain hates the feeling of conflict between what you know and what you want to do. So instead of just not doing the thing, your brain does something sneaky. It rewrites the story. It finds a justification. It tells you that this particular situation is different from the rule, that the rule doesn't really apply here, that just this one time it's okay. Psychologists call this rationalization. And traders do it dozens of times a day without even realizing it. The setup is almost right. The risk is small enough that it doesn't really count. I have a gut feeling about this one. I'll make up for last week's loss with this trade. Every single one of those thoughts is your brain rationalizing a rule break. And the terrifying part is that it happens automatically. It happens fast, and it feels completely logical in the moment. So here's the fix, and this is the first trick nobody is talking about. It's called the pre-trade audit, and it works like this. Before you enter any trade, before you even think about clicking buy or sell, you open a notes app or a physical notebook, and you write down the answers to 4 specific questions. Number 1. What is my setup and does it fully meet my written criteria? Not mostly. Not close enough. Fully. Yes, number 2. What is my stop loss and where exactly is it placed? Write the number. Number 3. What is my profit target and what is my risk to reward ratio on this trade? Write the numbers. Number 4. Am I entering this trade because my plan says to or because I feel like trading right now? That last question is the one that changes everything because most bad trades don't come from bad analysis. They come from boredom, from the urge to be in the market, from the feeling that you're missing out if you're not actively trading. When you force yourself to write the answer to that fourth question, something remarkable happens. Your rational brain wakes up. The act of writing slows you down just enough to break the emotional momentum. And a lot of the time, when you actually write out the answers, you realize the trade doesn't meet your criteria, and you close the chart and walk away. Ryan started using the pre-trade audit. The first week he completed it for every single setup he considered. Out of 11 potential trades, he only entered 3. The other 8 didn't pass the written audit. Those 3 trades? 2 winners and 1 small loss. His best week in 4 months. Not because the market changed. Because he stopped letting his emotional brain make decisions his rational brain had to live with. The trick is not a new strategy. The trick is building a speed bump between your impulse and your action. 4 questions, written down, every time, no exceptions. That's the first thing nobody is talking about. Now let me tell you about a trader named Kevin. Kevin is 35 years old. He's an accountant from Denver, Colorado. Precise, detail-oriented, methodical in his work life. In his trading life, Kevin has a very specific problem. He is obsessed with being right, not profitable, right? There's a difference. And that difference is costing him thousands of dollars every year. Here's what Kevin does. He enters a trade. The trade moves against him. A normal, healthy, completely expected move against him, within the normal range of his stop loss, and Kevin cannot handle it. He stares at the screen. He starts searching for reasons why the price might come back. He pulls up extra charts. He reads news articles. He looks for confirmation that he's still right. He's not doing analysis anymore. He's doing therapy on himself. He's trying to feel better about a trade that is doing exactly what losing trades do. And sometimes, when the trade gets close enough to his stop, Kevin moves the stop, just a little, just to give it more room, because he cannot accept being wrong. Does that sound familiar? Have you ever moved a stop loss because you just couldn't bring yourself to take the loss? Here's what happens next for Kevin. Sometimes the trade comes back and he feels like a genius. That's actually the worst outcome because it teaches him that moving the stop was the right decision. It reinforces the behavior. And the next time he does it, the trade doesn't come back. And now instead of losing his planned $80, he loses $240. And then he does it again and again until one move the stop decision turns into a $600 loss that was supposed to be a $90 loss. Kevin's problem is not discipline in the traditional sense. Kevin is actually very disciplined about his entries. His problem is identity. Kevin has unconsciously tied his self-worth to his win rate. Being wrong on a trade doesn't feel like a trading outcome to Kevin. It feels like a personal failure, and his brain will do almost anything to avoid that feeling, including moving stop losses, including holding trades way past their logical invalidation point, including turning a controlled loss into a catastrophic one. Why does this happen psychologically? It goes back to how most of us were raised. In school, being wrong was bad. Getting the wrong answer meant a lower grade. It meant embarrassment. It meant you weren't smart enough. So from a very young age, our brains learn to associate being wrong with danger, with shame, with inadequacy. And then we enter trading, where being wrong is not just normal, it's necessary. Professional traders are wrong all the time. The best traders in the world lose on 40 to 50% of their trades. Being wrong is literally part of the business model. But our conditioned brain doesn't know that. Our conditioned brain screams, Do not let this trade close at a loss. Find a way to be right. And so we move the stop, and we hold the loser, and we turn small losses into big ones. All because we were never taught that being wrong in trading is completely fine. So here's the second trick, and this one is going to feel strange at first. I want you to start celebrating your stop losses, not grudgingly accepting them, actually celebrating them. Here's why. A stop loss that gets hit is proof that your risk management is working. It is proof that you followed your plan. It is proof that you are a disciplined trader who respects their own rules. That deserves acknowledgement. That deserves a moment of recognition. When Kevin's stop gets hit and he closes the trade at his planned loss, I want him to literally say out loud or write in his journal, "I followed my plan. I protected my capital. That was a good trade," because it was. A trade that follows all your rules and loses is infinitely better than a trade that breaks all your rules and wins. The losing trade built discipline. The winning rule break built a dangerous habit. Here's the practical tool. After every trade, before you do anything else, you open your journal and you write one sentence. Either "I followed my plan completely on this trade," or "I deviated from my plan in this specific way." That's it. Just one sentence. And at the end of the week, you count how many trades had the first sentence and how many had the second. Your goal is not a specific win rate. Your goal is to increase the percentage of trades where you followed your plan. Because here's the truth that will set you free. If you follow your plan on every single trade, the profits will come automatically. The edge is already built into the plan. You just have to let it play out. Kevin started tracking plan compliance instead of win rate. Within 6 weeks, he stopped moving stop losses almost entirely, not because he forced himself, but because he finally understood that a followed stop loss was something to be proud of, not ashamed of. His account stopped having those devastating $400 and $600 losses. And those losses were what had been keeping him stuck for over a year. Stop measuring your success by your win rate. Start measuring it by your plan compliance rate. That's the second trick nobody is talking about. Now let me tell you about the third trader. Her name is Jessica. Jessica is 27 years old. She lives in Charlotte, North Carolina. She started trading about 18 months ago. She's gone through the typical journey. Lost money at first. Studied hard. Got a little better. Started to find some consistency. But then something strange started happening. The better she got, the more anxious she became. The more she learned, the more paralyzed she felt. She'd identify a setup. Everything looked good. But then she'd second guess herself. What if I'm missing something? What if there's a news event I don't know about? What if this level doesn't hold the way I think it will? And she'd wait. And she'd miss the entry. Or she'd enter and then immediately start doubting the trade and close it early for a tiny profit or a tiny loss, and then watch it hit her original target. This is analysis paralysis, and it's the shadow side of becoming more educated in trading. The more you know, the more you realize you don't know. And for some traders, that awareness becomes crippling. Have you ever known exactly what you wanted to do in the market and then talked yourself out of it before you even clicked? Here's what's happening inside Jessica's brain. As she learned more about trading, she also learned more about all the ways a trade can go wrong. She learned about false breakouts, about liquidity grabs, about news spikes, about smart money manipulation. And every one of those things she learned became a new voice in her head during a trade, a new reason to hesitate, a new source of doubt. Her knowledge became her enemy, and the more she froze, the more her confidence eroded. And the more her confidence eroded, the more she froze. It became a loop, a downward spiral of overthinking that made every single trading decision feel enormous. Even trades with clear setups started to feel like life or death decisions. And that kind of weight is unsustainable. Psychologically, this is called analysis paralysis, and it's rooted in something called loss aversion on steroids. Jessica doesn't just fear losing the money. She fears making the wrong decision. She fears looking back at a losing trade and knowing she chose to enter it. The responsibility of that choice feels unbearable, so she delays the choice, or she finds enough doubt to justify not choosing at all, which feels safer in the moment. But over time, it's just as destructive as overtrading, because you can't build an account if you can't pull the trigger on good setups. So here's the third trick, and this one is probably the most counterintuitive of all. I want you to start thinking about each trade as a business expense, not as a personal decision. Let me explain what I mean. A business doesn't agonize over every individual cost. A bakery doesn't spend 3 hours deciding whether to buy flour today. Because what if they don't sell enough bread? They have a budget. They have a plan. They buy the flour because it's part of the system. They accept that not every batch of bread will sell perfectly, and they trust that the system as a whole is profitable over time. That's exactly how you need to think about each trade. Your trading plan is the business model. Your stop loss is the cost of doing business. Your individual trades are just business expenses. Some expenses lead to revenue, some don't. But you don't shut the business down over one bad expense. You trust the model and you keep operating. Here's the practical shift. Take your trading plan and calculate something called your expected value. This is actually simple. Look at your last 30 trades. What percentage of them were winners? Let's say 45%. What was your average winning trade size? Let's say $120. What was your average losing trade size? Let's say $70. Now multiply 45% times 120 equals $54. And 55% times 70 equals $38.50. Subtract the loss side from the win side, 54 minus $38. 50 equals $15.50. That means on average, every single trade you take has an expected value of positive $15.50. Every trade, including the ones that lose. Because over time, across enough trades, the math works in your favor. When Jessica calculated her expected value, something shifted in her brain. She realized that hesitating on a good setup wasn't protecting her from loss. It was actually robbing her of expected value. Every trade she skipped out of fear was a $15.50 bill she sent back to the market, refusing the profit that her own system had earned her. She started thinking of each trade not as a scary decision, but as a $15.50 coupon she was choosing to use or throw away. And suddenly the paralysis started to lift, because she wasn't making a personal judgment call anymore. She was executing a mathematically positive system. She was a business operator, not a gambler hoping to get lucky. Her entry rate on valid setups went from about 40% to over 80% within 1 month. She didn't change her strategy. She didn't change her risk management. She just changed the mental frame through which she looked at each trade. And that change alone made her more money in 1 month than she had made in the previous 6 combined. The trick is not to feel more confident. The trick is to not need confidence. When you trust the math of your system, individual trades stop feeling personal. And when they stop feeling personal, the paralysis goes away on its own. All right, let's bring this all together. 3 tricks. 3 things that almost nobody in the trading world is talking about openly. The first trick is the pre-trade audit. Before you enter any trade, write down the answers to 4 questions. Does this fully meet my criteria? Where is my stop? Where is my target? And am I entering because my plan says to or because I feel like trading? That 4-question audit creates the speed bump your impulsive brain desperately needs. It breaks the emotional momentum and wakes up your rational decision making. Ryan used it and went from 11 impulsive trades in a week to 3 high-quality ones. The second trick is to celebrate your stop losses. Stop measuring yourself by your win rate. Start measuring yourself by your plan compliance rate. A stop loss that gets hit according to your plan is a win. It means your risk management is working. It means you followed your rules. Kevin stopped moving his stops when he stopped treating losses as personal failures and started treating them as proof of discipline. The third trick is to calculate your expected value and start thinking of every trade as a business expense. Not a personal judgment call, not a scary decision, a business transaction with a positive expected mathematical outcome. Jessica went from missing 60% of her valid setups out of fear to executing over 80% of them. Not because she became braver, but because she stopped needing bravery. She had math instead. If this video showed you something you haven't heard before, hit subscribe right now. New videos every single week. Real trading psychology, real risk management, real mindset work. No gimmicks, no fake signals, no lifestyle flexing. Just honest education from someone who has made every single mistake I described today. And next week we're going somewhere most traders are completely terrified to go. We're talking about losing streaks. Specifically, what to do when you've had 5, 6, 7 losing trades in a row and your confidence is on the floor. How to stay in the game mentally and financially when everything feels like it's going wrong. That video might be the most important one I've ever made. I'll see you there.